This is how the market was on Friday when we finished off and went for the first full weekend in June. Look at the stock market. We had a bit of a softening on Friday, but it was a very strong rally within the first 4 trading days. So we came off with about 5.03%. We added about 1 trillion naira to the market cap, what we call the equity cap. We finished off at 14 trillion naira. We had a bit of a haircut on Friday. Then we have a month to date, 1.11%. Looks like June is going to be very different a month. Year to date, 1.48%. And if you take that away and look at the primary market indicators, nearly 2 billion shares were traded in the week, and that's a nice amount in naira value, 31.2 billion in 24,604 transactions. And you look at the sectoral readings, with the exception of oil and gas and insurance. Banking came back with 4.5%, consumer goods roaring 6.55%, and even industrials roared much more than the consumer goods, almost 10%, 9.36 on the counters. But if you check with the oil and gas, where we saw a 1.34% weakening, look at how investors took book some profit in the companies that are in the Seplat held this annual shareholders meeting. During the week, the investors took 3.25% profit on that on Friday. Less than 100,000 shares. This EMP company saw its share price down 711 naira.1. Then you have Total. Unchanged. Eternal Oil suffered 4.93% on Friday, down at 656. Global Specs 6.35, trading listing there unchanged. Japol is making a comeback, 6 naira 90, less than 1 million, a shade of that, by 6.9%. Who else is on that table? Roll that over. Let's see. Okay. Corn Oil had a 1.54% green shoot. 40 Oil was unchanged. Mobile, or double one, was 174.30. MRS, lackluster for months on end. I'm trying to remember when last MRS actually moved at 34.25. And Wando lost 8.84%. And the rest is there. It's just great. Now let's move on to the fixed income, where we're having this conversation right now on the secondary market. Look at Friday closing numbers. All week, triple digit on a daily basis. The Treasury bills market, 115.63 billion naira at the FMDQ OTC Securities Exchange. Just had the 4 most actively traded treasuries on Friday. Look at the bonds. Roll that over. Let's see how the naira bond was performing, about 10.33 billion naira. It's going to be an interesting trading week as we start another one. The central bank was aggressive last week, mopping up for dollar, or what you call the FX market, and mopping up via the open market operations. Then we got the third quarter debt office calendar from the DMO, as well as the savings bond for the month of June. So let's get to Aziba, who is one of the investment analysts at Afrinvest. Good morning.
Good morning, boss.
Great to have you. Very interesting trading week, a little bit bearish.
Yes.
While stocks made a very strong comeback. So, but the central bank was quite aggressive, and everyone was wondering, why is the central bank mopping up so much liquidity on a daily basis?
Well, what we've noticed is trading activities in the fixed income space has been largely determined and affected by liquidity dynamics. And like you rightly mentioned, the CBN has continued to mop up liquidity in the market. So when you have OMO or treasury bills maturities that could potentially boost system liquidity, you see the CBN come up with an OMO issuance to mop up that liquidity. And it's been largely tied to the fact that the CBN has come out to state that the mop up of liquidity is in a bid to reduce pressures on domestic currency against the dollar. So in an attempt to maintain that stability that we've seen in the market and also reduce pressures, we've seen the CBN continue to mop up liquidity.
Don't leave too much naira in the system, else folks start to play games.
With the naira against the dollar. So it's just trying to manage that demand there in the market.
Demand and supply. It's a constant fox and dog chase.
Pretty much.
That's what it is.
Yeah.
You need to. So, but again, if you look at what returns are on our Naira papers, both treasuries and bonds, it's still not so bad. I'm still seeing some double digits.
Yes, I mean, we still have double-digit returns. I mean, not like the levels that we saw last year, where you had treasury bills, for instance, at about 19 to 20%. We've seen that moderate significantly to about 11 to 12% thereabout. So also in terms of trading patterns by investors, last year with the higher rates that we were seeing on the shorter end of the curve, we saw a lot of investors play at that shorter space. But now we've sort of seen a change in pattern with a lot of investors starting to turn their attention towards the longer end of the curve where they can get better rates. And this is largely tied to the fact that we've seen headline inflation continue to moderate year on year, and also the expectation of a possible easing in the short to medium term. So a lot of investors are trying to lock in on longer tenured instruments, and that's where we've really seen the demand in recent trading
Is
activities.
interest rate haircut locally still feasible before the end of the year?
Well, I mean, it's still possible.
It's still on the cards.
It's still on the cards, and prior to every MPC meeting for the rest of the year, there'd still be a lot of speculations with regards to that. But if you start to consider the fact that in the developed markets, you're seeing most of these systemic central banks start to adopt more hawkish policy stance, it could possibly be detrimental to our own domestic markets, as you could start to see. You could start to see significant capital flow reversals, foreign capital flow reversals.
If the European Central Bank stopped the quantitative easing, they had a major meeting in about a week or two from now. They will get a US FOMC meeting this week, Tuesday and Wednesday. These are very serious external developments for us to watch.
Yes, definitely. And the impact of these meetings, like you mentioned, is already seen in the Nigerian Euro bonds that are currently trading on the market. Over the past month or 2 months thereabout, we've seen significant sell-offs, and not just on Nigerian markets, basically across emerging market assets. We've seen a largely bearish performance. A lot of investors have been selling off and exiting these markets.
It looks like a lot of trouble out there, isn't it?
Well, it's there on the horizon.
In Angola, where you're looking at about interest rate, you look at the bond yield, IMF with Argentina, they got a problem with Italy, then with Turkey, then with Brazil.
Yeah, there are a lot of external factors that we need to consider in whatever policy decisions
so I'm beginning to think whether our own MPC will still be able to make good. Optimism was strong towards the end of last year that by this time we should have seen at least one rate cut by the central bank. It hasn't happened yet.
Well, it hasn't happened yet, but the jury is still out on that. We still have about 2 or 3 MPC meetings left for the year. But we believe these external factors would definitely be considerations that the committee will be making before making any policy pronouncements.
We're entering another week where the central bank doesn't look like it's going to let up on this very aggressive liquidity reigning.
Well, this week we're expecting treasury bills maturity of about 180.9 billion naira thereabout.
Most likely
that same amount is expected to be rolled over. We're also expecting some OMO maturities in the week, and in line with historical trend, we believe the CBN will most likely continue with its OMO mop-ups to keep system liquidity levels in check.
So how does that play out for me if I am doing fixed income?
Okay.
Bearish sentiment?
Well, in terms of how the market might move, there'll definitely still be opportunities there for investors to take advantage of, especially at the longer end of the curve, which is what we've continued to see with higher yields and rates at that segment, and we believe that's where the demand will most likely be centered.
So when fixed income softens, what moves up?
Well, essentially, if investors aren't playing in the fixed income market, then we could most likely see increased participation in the equities market. But I mean, with the 4 consecutive days of gains that we saw by Friday, we already started to see some profit taking in the market. in the equities market.
That seemed to come in too early for me.
Well, not necessarily. So even in early trades this week, we might still see some profit taking maybe today and then tomorrow. But subsequently, we'll most likely see some investors come back into the market, try to take a position in some of these bellwethers that could have depreciated.
Let's look at the calendar for Q3. In terms of what the DMO will do, the debt office will do, looks like going to roll over. We're looking at an amount in excess of a little over 1 trillion naira. Nothing has changed in terms of what the offerings will be, but we're going to see the June auction next week.
Yes, and we're going to be seeing how liquidity dynamics, if the CBN is going to continue to keep liquidity in check, how this could possibly affect the DMO offering and pricing of the instrument as well. Because with tighter liquidity, there's a higher chance that investors would demand for higher rates, which
from
could also
from the DMO.
Yes,
yeah, money is scarce.
Exactly.
You want it from me, you got to pay for it.
Pretty much.
You got to pay for it anyway, because a central bank is mopping up. The DMO is coming in here, going to lock in. Do we have any idea what tenor will the debt office will be offering for June?
Well, we believe the 5-year and possibly the 10-year and then the 32.
Yeah, 2032.
Yeah,
will be more in what they were offering. Well, what will inform the type of instruments that the DMO will be rolling out? Rates, future interest rates, what?
Well, essentially for investors, in terms of their possible returns, like I mentioned, we believe investors most likely want to continue to play at the longer end of the curve to take advantage of the more longer tenured instruments in terms of their decision making.
Okay, I guess we have a lot to chew this week, but if anything has happened on the side of the market, we need to understand that. The next MPC is when?
Next month.
Not going to be July. So between now and then, we still have a lot to play.
Definitely.
We can play quite a bit before that comes. Let's leave it there for today. Thank you very much. Aziba, who is one of the investment analysts at Afrinvest. What's the top stories for today? Is now Nigeria's budget 2018 is not yet released. The executive branch is still holding it. It's still in the inbox of the president. He's currently in Morocco for a 2-day working visit. And if you've seen the news later, how Nigeria is ramping up its oil and gas, what to call the hydrocarbon relations with one of the largest economies north of the continent. Meantime, the Lagos Chamber of Commerce and Industry over the weekend issued a 16-paragraph statement warning the impact of delayed 2018 appropriations, saying that delayed passage is therefore a threat to achieving the ERGP targets and to Nigeria's goal of becoming one of the top economies by the year 2020. We got less than 24 months before we become one of the top 20 economies in the world. We'll see how that paces out. That's also the story. So Nigeria's dream of making double-digit economic growth is being threatened by delay in the budget. We will have the end of budget 2017 technically this week, according to the Finance Ministry, without a new budget in place. How the overlap will look like is something we'll track for you throughout the current week. Meantime, Nigeria's Sovereign Wealth Agency, the NSI, has reported a slump in its operating profit because 2017 was dented by foreign exchange costs and higher management expenses. That's what the NSI reported over the weekend. 42% in profit fall against the previous year of 1.66 billion naira. But the total assets under management by NSI increased nearly 30%. Now, the agency says it will focus more on domestic investment. The Nigerian authorities, the current administration has pumped about $650 million extra into the Nigeria Sovereign Wealth Fund. Now we have something heading towards $3 billion in total. We'll be right back after the break. You're watching Business Morning.